Hello, everybody, and welcome to the Trading with Ashley show. I hope you're having a relaxing weekend. We have a 3-day weekend, so hopefully you're getting to spend some time with friends and family. And if you are into trading, use this extra time to watch as many videos as possible and study up for the coming week. So this video is going to help you. The last video I did, I actually covered 4 stocks, and I am going to take it a little bit further this video. I'm actually going to look at potential trade setups. There's a variety of ways to trade depending on where a stock is in its price life cycle. So I'm going to look at a few different options on these different trades and give you some ideas to kind of whet your appetite for trading. Now, speaking of trading, we just wrapped up the Buy Right Challenge in my community. The results were incredible. I'm so excited. We made over $5,000 from $30,000, and all primarily came from the buy right dynamic. The buy right is when you buy a stock that's in a bullish mode, you immediately sell a covered call on it, and then you allow the stock appreciation plus the covered call to call away your trade. It's a great way to trade, and it allowed us to rinse and repeat with the money we were using. So we were able to accomplish this by using the same money over and over again to make new money babies. And it really does work. If you were to stay on this trajectory and you did this every 6 weeks, you would have over 150% return in a year. Now, of course, results are not guaranteed and the market has to cooperate on the different trades that you're choosing. But if you just look at my account, in the last year of trading, I have been able to produce almost 140% return. So it really can be done. And it's not just me, it's my members. I wanted to congratulate a few of my members that had quite a few milestones this week. I'm going to rattle through them real quick. First of all, I want to congratulate Diane. Diane has been trading for just 1 year. She's been with me for 8 months, and she has been able to produce a 68% return in her retirement account. Now, Mike, just this month, he was able to produce over $10,000 in premium. Eric, he was able to produce over $12,000 in premium. And Joan has been an inspiration to all of our members. She actually produced $26,000 profit in 1 week. And we were all celebrating Lee. Lee paid off their mortgage by having an incredible month with $83,000 in profit. So I want to congratulate all of my community members that are doing really well. No, we do not win every trade, but it's how you react when you have a losing trade that can really help change the way you approach trading. Now, speaking of potential losses, I want to share something with all of you that are so afraid of September. Now, I know in my community we have been cashing up, but we've been cashing up for the opportunity that a market pullback brings. The time is now to learn. It's not when the market is soaring at its heights. It's when things pull back that you want to enter into the market. So when I look back over the plays that helped me achieve that 140% return in the last year, the vast majority of it came from being put the shares of stocks that I'd sold puts on back in April when things were so rough. And I just waited until the stock market turned back around, which inevitably it always does. And then I was able to sell calls against those shares and have them called away in profit. And that is really the bulk of what made me such an incredible return, and that of my members. And so if we get a second crack at it here in the next couple of weeks, I'm super excited because we will maybe potentially take assignment of some of these stocks that we love so much, and then we will be able to see them through the end of the year as they begin rising again. So you can't be afraid of assignment, and you can't be afraid of assignment, and you can't be afraid of the red. Remember, today's red is tomorrow's green. Now, you don't want to be foolish and just throw everything in the market when things are pulling back. You want to keep some money to the side in case you want to use that to pay the light bill, pay for groceries, or the things you need, because ideally you won't get the money from your account that has trades that need to be worked out. So it's really important when you are a trader, and if you do this for a living, that you either have a side gig when the market's red, or you have saved enough cash to use that cash for life's necessities, because the last thing you want to do is get out of trades that have a lot of promise just because it's the wrong time. So that's important for all of you to consider if you're going to try to trade for a living. So if you have just a little bit of trading knowledge and you want to take your trading to the next level, I want you to consider joining Ashley's Inner Circle. There's a link below where you can book a call and talk to one of my team members. They'll show you everything. They'll answer your questions and you can decide if it's right for you. Now, this is a note to all of those that are wanting to get into trading and they just don't know where to start. I have a community called the New Trader Network, and New Trader is exactly what it is. It is for people that have a smaller account and they want to crack into trading and they just don't know where to begin. I am going to teach them how to do credit spreads. And we have a training coming up in the community on September the 4th. If you're able to join the community, there's a direct link below to get in my community so you can be a part of this challenge that I will be doing with everybody. Now, the challenge won't start until September the 8th. I want to make sure that everyone has a chance to review the training that I'm doing with them live on September the 4th so that they can be ready for the challenge. And we will not be doing several trades a week. We are going to go slow and methodical because I want to make sure that my traders are learning how to do this and not just copy trading. If you're interested in that, the link is in the description below. Now, let's go into the computer and let's go look at the 4 stocks that I just discussed with all of you in my last video, and let's see how we may decide to trade these if you want to trade them this week. We're going to start off taking a look at Robinhood. Now, there's some potential volatility around Robinhood. There has been a lot of speculation on if they will be included in the S&P, and so they may or may not. But as we see Bitcoin adjust up and down in crypto and trading, the pressure will be on Robinhood. It kind of trades in tandem with whatever Bitcoin is doing. It's got a piece of that, and then trading in general. So if we see some pressure on the market over the next couple of months, we could see Robinhood come down to a more reasonable price level to get in. So let's look at it for this trade. Because it's a little bit more expensive of a stock, I am going to do a credit spread, and I'm going to do one that's a little bit further out. So if I'm going to do that, I definitely want to look for support, and not just how I would look for support if I wanted to sell a put. Because remember, when you sell a put, the worst thing that could happen, you just get assigned the shares. But when you're doing a credit spread, you do not want it to breach your strike price. So if you look here at the technicals on Robinhood, it is almost at the bottom of its Bollinger Band. So that's encouraging. This is the 3-month chart, meaning it could more than likely get a bounce. It also is sitting right there on the 50-day moving average. So that's something to consider as well. And I see there's some candle touches, so it looks like this is a decent area if you were just selling a put. But remember, I'm doing a credit spread. So what I want to do, I want to come down here to where this cluster of candles are right here, because this shows that there actually has been some support. Now that's going to put me closer to around that $72 level. But one other thing stands out to me too. You've got this important moving average right here. This is a 100-day moving average. And so that provides a little bit of protection. So I think what I'm going to do to open my trade, I'm going to look at the $75 strike, because it looks like there is support at 72, but then also I have support at the 100-day moving average. It's around 80. So I think 75 might be a decent spot to do a credit spread. Let's go see what we can find if we build a spread going out maybe to November or December. Okay, now that I'm on the option chain, I am going to select December because I want to get over the volatile months of September and possibly October, and that it gives me a little bit measure of safety. And I don't want to go ahead and flesh out my entire position now, because if I have a budget, let's say I have a budget for 6 spreads on Robinhood, I may just do 3 now. And then if I see it pull back to more critical levels of support, I might add to that. And that would help me have a more profitable trade when it decides to turn around. So let's look on the chain. You see that 75 right here? I could sell a put, and this would be $3.47 a share. So that's pretty good. So I think I'm going to start there. Now I am going to do what's a $10 wide spread, meaning instead of having to put up $7,500 for 100 shares, I'm going to be buying a put at 65. This technically allows me to sell Robinhood at 65. So if I get assigned at 75, having this put at 65 that I bought, so that's a $10 wide spread, and that is going to require $1,000 in capital. And when I buy this one, it's $171. So I get to keep the difference from being paid $347 and then turning around and paying $171. Let's send this to a ticket and see what it looks like. once I get to a ticket, I want to select net credit because I'm receiving a credit. And here you can see the midpoint is 164. So I'm just going to populate 165. Now, if this pulls back next week, this will actually be higher. So just keep that in mind. And if I put this on a ticket, I had mentioned 6 trades, I'm going to get $990 in credit. And so that's why you see the difference right here. It says estimated cost. I'm getting this credit. So if I were to lose 100% of this spread and it blew through both of my strike prices and I took 100% loss, my loss would be $5,000. For that risk, I am being paid $990. But I don't want to lose this. That's why I've selected the prices I have selected. And again, I populated 6, but remember, I only want to do about half of my desired position because if we continue to have a pullback, then what I am being paid right now, 165, this will go much higher, and then I can average up with my credits, and that's going to help insulate the trade a little bit more as well. So once this credit is cut in half, then I will more than likely take profit. So that would be, since I was paid $1.65, that would be something around 85 cents. I will go ahead and exit the trade. Now, what if it works against me? Well, my first decision will be if it starts pulling closer to 75, then if it looks like that there could continue to be support there, I will go ahead at that point and add to this position, and then I will see what happens thereafter. If it looks like that my whole trade's going to be in trouble and that's not going to work, then I definitely will decide to exit the trade before the 75 gets breached. The next trade to take a look at is SOFI. I had gone over SOFI, and SOFI actually has a lot of tailwinds going for it because even though it had taken a while to actually get going, now that it looks like we're going to be having some rate cuts, it appears that it is going to start enjoying the ride up. Now, we already had some pressure on it this week, but if the market pulls back, there could be more pressure. Because we are trading over 50 on the RSI, I'm going to look to the middle of the band for a sold put. And that's right here at about that 23.50-24 level. So let's go see what I can get in premium if I am going to sell a put at that $24 level. And what that means is I am willing to buy SOFI shares, not at what it's trading at today, but if it pulls down to the 24 mark. And I'm going to be paid a premium for that. So worst case scenario, I get to keep the premium and I don't get the shares. Best case scenario, I actually get SOFI for $24 and I keep the premium, and then I wait for it to take off again and I start selling covered calls. Now, my expiration date with SOFI, I am going to go ahead and look at the 19th of September because I actually want to be assigned this stock. Because if we have that pullback and the rates start surging, then it will take me with it as long as SOFI is a part of that. So if I decide to do that, look right here at that $24 mark, I am going to be paid 69 cents a share. So for putting up $2,400, agreeing to buy SOFI at 24, then I will be paid $69 for that transaction. Again, worst case scenario, I keep the 69, I don't get assigned. Best case scenario, I get to keep the $69 and I'm assigned. Usually if I'm assigned right here at around $23.50, that would be a really good dynamic. And then it would hopefully then eventually start coming back up. And then I get to profit on both the premium from selling that put and then the stock appreciation itself. Now, the next couple of stocks I'm going to talk to you about, they are more speculative in nature. They're not yet profitable. So we want to be more cautious when we are buying this stock or when we're selling puts on it. And you probably don't want to put all of your budget that you have set aside for this stock at one time because if there's additional pressure, you want to average down. So the first one I'm going to talk to you about is Rocket Lab. Now, Rocket Lab right now, it's trading towards the top of its Bollinger Band, and it is over 50 on the RSI. So if it pulls back, we're looking at the middle of the band around 45. But like I said, when you have a stock like this and it's under pressure, it will usually go much lower than just the middle of the band. So if you want to look at its rise over here, you want to look at potential candle touches for a stock that is newer being traded like this and doesn't have a rich history of trades. And I see right here, this looks to be a level of support, and it looks to be right there very close to where the 100-day moving average is. So if you wanted a measure of safety, you would look for a trade, something around the maybe 35 or even 33 level to sell a put. Now, I can do that now, but I would be better suited to wait until we have a pullback and we're a little bit closer to this strike price, and then I'll get a lot more premium for it. But for the sake of just taking a look at the trade, let's go a little bit further out and see what kind of premium we can get if we stick with something around that $35 mark. For this trade, I'm going to shoot over the vulnerable months, September and October. I'm going to go ahead and go to December, and I am going to look at that 35 mark, and let's see what we have. Here's the 35 strike. My delta is actually really low. It's 0.16, meaning there's only about a 16% chance we end up here in December on my expiration date. But if I sell this put, it's going to require $3,500 in capital, and then I will be paid $2.65 a share. So $265 to go ahead and make this trade. Now, if Rocket Lab takes off like a rocket and we don't get anywhere near 35, then something that I was paid $265 for, it will start whittling down, and I will more than likely buy this trade back early, and then that'll release my $3,500 for other trades. So if I buy it back early, I have to give up a little bit of what I was paid, but usually that's a good decision if you have a different trade that you could use that same $3,500 for and make more than what is left in this trade. Our next trade, our last trade, is going to be APLD, and I like the stock because it is lower price, so it allows a variety of traders to get into the game at this price point. But you need to be careful because it is a stock that if too much pressure is put on it, it could crater. And one thing that stands out to me, one that we're trading towards the top of the band, but look right here, you see this gap? This will eventually have to be filled. So if we have some pressure on us in September, even October, then this gap will want to be filled. So let's see what that would mean. That would mean that it could come down all the way here at about that 1057. So 1050 mark might be reasonable. Pick up new traders, and then off we go again. So if I'm going to do a trade, I'm going to have to go a little bit further out since it is trading so much higher. But I think I'm going to stick with something around 1050 so that I'm a little bit protected in the event we do go down that low to fill the gap. Looking at December the 19th, if I go to the 1050, well, there is no 1050. We have 11 and we have 10. But look, there's not a huge difference in the amount of premium. So I think what I'm going to do to be safer, I'm going to go with the 10. If I go with the $10 strike, it will require me to have $1,000 to take assignment of 100 shares at $10 each, but I'm going to be paid $62 for that. So that's a really good premium for a lower price stock. Let's take a look at my deltas. They're at 0.12, meaning there's just a 12% chance that we're actually going to land here. So if you wanted to be more aggressive and pop up to the 11, you could. These deltas are still really reasonable. If you want to get even more aggressive, you'd go to a 0.2 delta right here, and you'd stick with maybe this $12 mark, and you're going to be paid about $1.20. So this is about a 10% return in just a few months if you're looking towards the end of the year, and that's not bad, especially if we're going to be having a little bit more red. So this one might be an interesting trade to make if you wanted to establish your position in APLD. Remember, if you're with me, trading with Ashley, there is no trader left behind. Now, if you were intrigued by the thought of credit spreads, I did a video on that for you just recently. I'm going to link that video for you right here.